Good morning, ladies and gentlemen, and welcome one and all to the Markets Now European pre-market live trading session. Hope you guys are all doing well out there today. I know it's a Friday, which means markets can be a bit temperamental and traders can be a bit sleepy. I know Fridays are usually a bit quieter, but that's absolutely fine. Maybe we will see some kind of potential opportunity this morning that's actually worth taking going into the afternoon session, where I will be returning for the full written breakdown of our US markets ready for the US Open, the last one of the week. So, and just to give you guys a little bit of an update on what was going on yesterday, we actually had European equities closing lower, and this was as investors continued monitoring developments surrounding the ongoing US-Iran conflict. Now, we did actually see quite big spikes across the board, but we did see the oil prices at the same time come down, so on and so forth. It was a bit of an interesting period, actually, because there was rumour of a deal that was being done to reopen the Strait of Hormuz. So markets remain focused on whether recent diplomatic efforts can translate into a more lasting peace agreement, particularly given the importance of the Strait of Hormuz to, global energy markets, of course. Now, a key headline overnight came from Axios, reporting that the US and Iranian negotiators had reportedly reached a proposed 60-day memorandum of understanding. The proposed agreement would ultimately extend the current ceasefire. It would open formal negotiations surrounding Iran's nuclear program and potentially reduce immediate geopolitical tensions in the region. However, according to the report, President Trump has not yet given final approval, meaning uncertainty remains and markets are still treating this situation with a lot of caution. And this is why we had the markets buying the rumour and selling the fact. And we saw this across the board. So this big spike up, which is buying the rumour, and then we sold the fact. And we've kind of not really done too much since then. So yeah, definitely worth noting. Energy markets to continue to be a major concern here as well. We did have natural gas amazingly hike and reach target profit, by the way, ladies and gents, which I'm really pleased to say. Quite an amazing move, to be honest with you. I mean, we were in this and it was, range bound in the red right up until 2:30 yesterday. And in between the space of time, it's, from then until now, it's literally gone straight to target profit for a 1 to 2.48. So really happy on that one. Great call. And the energy markets, they are looking like they want to be trading lower, but they're just not quite there yet. Now, higher energy costs as well, as this could place upward pressure on inflation, which we've already seen. So there is the chance that central banks are going to be looking at raising their interest rates, US, European, British. So we could look at rate hikes now being, sort of forced through from this conflict over the course of the next maybe couple of months. Yeah. So the key takeaways here: the market is currently balancing two competing forces, right? We've got number one, which is the potential de-escalation between the US and Iran, which would be supportive for risk assets and, could ease pressure on oil prices, for example. But we've also got the other side of that, which is ongoing inflation concerns. And this is also driven by energy prices, which continue to cloud the outlook for central bank policy. So it's a real sort of fine line at the moment. But still, I think if we can pass a peace deal and reopen the Strait and get fuel prices moving through there again, energy prices are going to be coming down, inflation is going to be softening as a result of that. So yeah, I think it should be all right. So that's that. Now, in terms of what's going on, or what has been going on this week, it's not been absolutely amazing. I would say pretty steady. We're definitely up. Let me just bear with me. Just 2 secs. So we are up the week so far at 1.79%. which is great. And the monthly return so far is at 10.16%. So again, very, very good. Um, really good, actually. I'm really happy with that. So yeah, really happy with that. So not too bad. This week, 1.79%, definitely been a slower week of the group. It is, of course, the last week of May as well. And then sort of, breaking into June then next week. So yeah, it's been all right. We haven't really had any major fundamental drivers, really, sort of working for price action. Next week's going to be all about the NFP on the Friday, of course, and the unemployment rate and average hourly earnings data and so on and so forth. So that's where we're all going to be sort of driving our attention to throughout the course of the week there. But yeah, it's been, I'd say, pretty quiet. A lot of range bound markets, a lot of slow price action. But look, we're coming away so far. We've still got today to go, and we're still coming away with 1.79% growth. So I think not bad. And by the way, that will probably be, let me just check. Yeah, see, that's not even pulled through the natural gas order yet. So it's more like a 2% week so far, which is great, isn't it? Not too bad. Now, in terms of the European indices this morning, looking at the setups here, let's go up to the 15-minute time frame. Okay, so the 15-minute time frame, we've got highs, we've got lows, available trading margin there, and we've also got this level in here. And what I'd be doing is putting that level in there, dragging another one down below, and then lining up the long above there, and the short the exact same kind of place down here. There we go. So that would be the EU50 setup. Clear margins, opportunity on both sides of the market, but do be aware, we've not been doing great on the EU50 recently. It's not been a great contender this week. Now, we've got this area, we've got, I would say, this area, and we've got the breaker structure, which would be situated, yeah, definitely in around there, isn't it? About there, I'd say, would be the POS. Quite a sizable trading margin on this one. Don't really have any short availability, but still not bad. 1 to 3 on that one. I'm not overly interested in taking the long. I mean, that's a big point of liquidity in the DAX actually, so a rejection from there might be nice. So just going to go for that one. And then we've got the UK FTSE. UK FTSE's been good to us this week. Again, liquidity above price, liquidity down below, strong trading margin. Not really for the longs though, team, unfortunately. Again, if it's long today, it looks like the EU50 is going to be winning it. Big breaker structure this one. So short, target profit, and stop loss above the high. Doesn't mean that you can't buy back down at these lows as well. If the market reaches these lows in time, then you've definitely got the availability to go long after the rejection, okay? 100%. Download. Right, and that's going to be it. I think it's about a wrap there, guys. So yeah, I've got nothing more to add at this stage. We're currently at 7:10, so I will get the session uploaded, the trading opportunities out to you all in good time before the open comes, and yeah, we'll see what we can do. Hopefully, we'll get a couple of decent opportunities this morning, and of course, I will be back on this afternoon to provide you with the full either written report or it will be a session. I don't know yet. usually historically a written report of the US Open, and we'll take it from there, team. Okay, so take care, good luck, trade safe, and I'll catch you then. Bye bye.